Mic check 1, 2, this is the Next Majority podcast tuning in, and today we're diving into a story that's quietly shaping your wallet, even if you haven't noticed it yet. Maybe you've been wondering why your grocery bill is climbing or why electronics orders are becoming increasingly more expensive. These, of course, are not random price jumps. They're symptoms of something much bigger. In 2025, Donald Trump rolled out one of the largest waves of tariffs America has seen in decades. We're talking steel, cars, copper, Chinese imports, and even gold being tariffed. Whether you're into politics or not, these tariffs are already changing what you pay at the checkout line, and they're sending shockwaves through the global and national economy. In this episode of the Next Majority podcast, we'll break it all down. What a tariff actually is, why Trump is using them right now, some pros and cons, and how they're being used not just as an economic tool, but as a weapon in global negotiations. So let's start simple. A tariff is basically a tax on imports coming into the country. For example, if the United States slaps a 20% tariff on Chinese metal, the company importing it has to pay 20% extra. And most of the time, they're not just eating that cost bare. They're passing it along to you, so when you buy a car, a fridge, or even a 6-pack of soda, the price for that Chinese metal product is going to go up. The idea is to make foreign goods more expensive so that people buy more American-made products. That's the theory. However, in reality, tariffs can also trigger retaliation. Other countries can put taxes on our own goods that are coming into the country, making it harder for US farmers, factories, and companies to sell overseas. That's when you stop calling it a disagreement and start calling it a trade war. So why now? Why is this happening in the midst of 2025? So for Trump, tariffs are not just about protecting industries, they're about leverage. Take Russia and Ukraine for example. Trump told Putin, make a deal with Ukraine within 50 days or face crippling tariffs up to 50% across key sectors. This isn't just about economics, it's about using trade pressure to force political change. Then there's India. They've been buying cheap oil from Russia for a very long time, and the US responded with tariffs that bring down the total duty to roughly 50% on many Indian exports. The message is clear: stop fueling the Russian economy or else we're gonna put tariffs on you. India, not thrilled, has slowed down certain US arms purchases and hinted at many retaliatory tariffs. Even allies are not safe. Canada and Mexico were hit with tariffs on steel, cars, and more. Currently, the rate is at 25% for baseline objects and goes even higher for some goods, mainly to bolster national security and curb illicit trade on our northern and southern borders. Canada has already told its citizens to start buying Canadian and is considering countermeasures. And of course, there's China. The United States has maintained and expanded tariffs on Chinese imports from 30% on a wide range of products and in some cases up to 145%. The goal being to shield American manufacturing and shift away from reliance on Chinese supply chains. But part of this is also intention for the strongest global power. China has responded by threatening restrictions on US firms, which could escalate tensions even further. Now, tariffs are not black and white. There are multiple pros and cons. On the upside, they've generated huge revenue. In fact, according to USA Facts, US collections from tariffs have already climbed to about $108 billion through June, nearly doubling last year's collections, and are projected to reach a whopping $300 billion for the whole year. This money can reduce deficits and signal economic strength. They also protect domestic industries, encourage local protection, and boost negotiating power. But the downsides, they nearly always raise prices for consumers. Homes, appliances, and electronics are already costing more. Another risk is retaliation, hurting US exports like soy, machinery, and specialty goods. These moves strain alliances and can wreak havoc on global supply chains, leading to shortages and delays. So tariffs can be powerful tools, but they're also a high-stakes gamble. You can secure short-term wins or spiral into a trade war that leaves everyone worse off. Sometimes, though, imposing or lifting tariffs can even pause retaliatory measures against America if other countries value access to our market enough. Right now, Trump is betting that America's massive consumer economy gives it leverage. The next few months will show if that actually pays off or if it blows up back into our faces. Because here's the thing, tariffs aren't just taxes, they're a chess move. And this year the United States is playing a very aggressive game. If you want to stay on top of how these shifts impact your daily life, hit subscribe and hit that like button because we're covering the stories others bury into the business section. This is the next majority, zooming out.